Hello again. Hong Kong Exchanges and Clearing, that's Asia's third biggest bourse operator, has been grappling with low market turnover and a decline in new listings. Now, last year, Hong Kong's IPO global ranking fell to 8th place. It had topped the league back in 2019, raising some $40 billion. Last year, it raised just about $6 billion. But newly minted CEO Bonnie Chan, the HKEX's first female CEO, is confident that an IPO revival is inevitable. Now, to talk more about this optimism, Bonnie Chan joins us live now in Singapore. Bonnie, good to have you with us. Now, Hong Kong Exchange's first quarter profit slipped 13%, but it did beat the market and the best quarter in a year. So, a turnaround in fortunes, do you think?
Yes. Well, first of all, thank you for having me, Roland. I should say that the first quarter results gave us a lot of hope, and I think this is now being manifested in how our markets have been performing most recently. In fact, I'm in Singapore today, but I just got a report from my team in Hong Kong. We're seeing very strong volumes today. In fact, we're barely past 3 p.m. We are already at close to 180 billion, and this will be the strongest trading day we've seen year to date. So there's a lot of optimism, I think, in the air. And what we're working on actually for some time now is to make sure that we continue to focus on measures to really lift the liquidity. And obviously, I'm sure you'll be asking me a lot about our IPO markets. I have already mentioned in a lot of occasions that we're seeing a very healthy pipeline. So what we need to see is a good big IPO being done and priced well, and hopefully that's going to reopen the market for Hong Kong.
Bonnie, sentiment for new offerings, though, appear to be muted. I mean, the biggest listing so far this year slipped 27% on its trading debut. When or how do you see this improving? I know geopolitics and interest rates are beyond your control.
Right. I think, first of all, the softness that we've seen in the IPO market, it's not unique to Hong Kong. The last 2 years or so, it has been challenging for all the issuers, trying to tap the public market for the IPO. It has a lot to do with, many things, including macroeconomics, the high interest rate environment, geopolitics as well. But for Hong Kong, first of all, I think fundamentally we are still a very strong and compelling capital raising platform. And, we've done mega IPOs repeatedly in the past. So that has not changed. More importantly, I think we are seeing a revival in terms of issuers really wanting to do their IPOs. And most recently, you would have picked up the fact that there was an announcement by the Chinese securities regulator, the CSRC, and this was on the 19th of April, where they mentioned 5 measures in support of the Hong Kong capital markets, one of which is actually to encourage high-quality companies in the mainland to seek a listing in Hong Kong. So on the back of that news, I can tell you that we received a lot of inquiries from many potential issuers, and they are really, wanting to explore an IPO on the Hong Kong market. So yes, definitely we're seeing a very strong momentum there, and the IPO pipeline building up very nicely. Like I said, right, we need to see a symbolic and strong big IPOs getting done, and I think that's going to reopen the market.
Is your strategy also aligned with those 5 measures to reboot the stock market turnover as well as to attract new listings?
Okay, so let me quickly go through what the measures are. So, I already mentioned this particular one about the IPO market, but there are actually a few more, and 3 of them in particular has to do with the Stock Connect program that we have. And this year is, in fact, the 10th anniversary of our Connect franchise. And therefore, you would have seen that over the years, we continue to improve our offerings in the Connect franchise by including more products and just augmenting the inclusion of it. Now, the 3 measures are, first of all, a relaxation of ETF eligibility. So more ETFs can therefore be included in the Connect program. Secondly, the introduction of a new product, which is the inclusion of REITs, Real Estate Investment Trust, into the Connect program. And third, to add RMB counter into southbound trading, all of which are going to make our market even more attractive to investors, especially those ones which are taking advantage of the Connect franchise to invest into China and vice versa for Chinese investors to invest globally. Now, with that, obviously, we are hoping that liquidity will therefore improve, and as a result, making the environment even more conducive to getting IPOs done. So I think in that regard, absolutely, I think those 5 measures are very significant improvements, which we are going to take full advantage of. But to your question about our strategy, I think it has been something that we've been working on for a long time, which is to really highlight the fact that Hong Kong as a capital raising platform has something very unique to offer. And the one unique selling point, USP, that we have is really, since last year, the ability to include international companies which are listed on HKEX, to include them in the Stock Connect franchise, right? So what that means is any companies listed, or any companies from around the world, if they choose to list in Hong Kong on a primary basis, they have access not only to international investors around the globe, but they also have a channel to tap the very big investor base, retail investor base in China. And that's something that only HKEX can offer. And I think that hopefully will place us at a competitive advantage vis-a-vis our peers in terms of providing that very compelling fundraising platform.
You first introduced the Stock Connect many, many years ago, and then there was the Bond Connect. And then last year, HKEX launched the Swap Connect. Now, that was the last piece of an important puzzle for overseas investors entering into China. What's reception to that been like?
Yeah, okay. So thank you for that question. It's important because, like I said earlier, it's the 10th anniversary of the Connect franchise. So we started in 2014, and when we started, it was very humble, shall we say. I was just Hong Kong and Shanghai, and I was only focused on stock connection. But over the years, we expanded the offering of the Connect program. So first of all, you obviously added the Shenzhen Stock Exchange as our partner. And from stock, we expanded into bonds, and then from bonds, the ETF, and then ETF into swap. And this is the latest, but definitely not the last. I think there are still a lot of white spaces we see we can fill to make it even more attractive for the investors. We are also thinking of and working on a lot of ways to improve the micro infrastructure supporting the Connect franchise, and things like making sure that we can trade through holidays, for example. It's one example of that, and many other things that we're working on. And really, the objective is to make sure that investors on both sides, right, on the mainland Chinese side as well as internationally, they really can seamlessly partake, right, in the growth stories on the each other's side, and invest in a very straightforward ways, in ways which they are very familiar with in their home market, Hong Kong as well as in the mainland. And that's something that we'll continue to work on. Now, in terms of the Swap Connect you mentioned, actually yesterday we celebrated the first anniversary of Swap Connect, and I am very happy to report that this has become a very attractive offering to our investors. So now we have definitely moved beyond just the stock space, but into also fixed income. And I think as international investors continue to want to partake in the China growth story, they are going to want even more exposure in different areas. And that's what we are really working towards, to make sure that our Stock Connect program, it's diverse, it's capable of including more products so that investors can really have more optionality.
Bonnie, going back to stocks, Deloitte China forecasts some 80 new listings in 2024 for HKEX. Are there any potential blockbuster listings in the IPO pipeline? Okay, so we are, well, like I mentioned earlier, right? The pipeline it's looking very good. It's very healthy. I will share with you that actually our focus since 2018 really is to make sure that our listing regime it's more inclusive and with a particular focus on new economy companies. And frankly, these are areas which I believe investors are particularly interested in.
And so I'm talking about things like artificial intelligence, quantum computing, new materials, new energy, right? These are really the areas which international investors as well as mainland investors are most excited about. And we have now already introduced the listing framework and in particular a new chapter called Chapter 18C last year, which we have added to our rulebook. So now it's about sort of making sure that the listings happen. Whether or not we're going to have a big blockbuster deal, I can tell you for sure that we're capable of doing it, and we've demonstrated it over and over again with mega IPOs, as big as 20-30 billion US dollars. Now, whether or not we're going to see deals to that magnitude, I think a lot depends on how the business owners want to plan their capital raising, right? I think what we're seeing in terms of valuation in the market. Obviously, we've seen a very healthy rebound since the beginning of the year. Business owners always want to fetch the best price for their company stock. So I'm hopeful that we're going to see not only IPO activity picking up, but also hopefully more sizable deals. And you mentioned the Deloitte's report, which talks about 80 deals. I think that's certainly achievable. Even when we look back to 2023, which a lot of people saw as a relatively weaker year, we did 73 IPOs in Hong Kong compared to 90 in 2022. So the number of IPOs hasn't actually dropped that significantly. The fundraising is explainable, right? The drop is more pronounced because of what I alluded to earlier, which is that business owners do want to time their IPO carefully, right? So they catch a higher valuation. But everything I'm seeing in the markets recently, especially today, is giving me a lot of hope that we're hopefully going to see a much more conducive environment in terms of IPOs getting done at more attractive valuations.
I've also been hearing plans of Alibaba as a dual listing to be included in the Stock Connect scheme to allow some of China's 200 million plus investors to buy into the stock. Remember, Alibaba, of course, to our viewers out there, isn't listed in China.
Okay, so Alibaba, so suffice to say that they have already announced in public, so I can refer to it, the plans to convert into a primary listing. The significance of it is, of course, the potential for Stock Connect inclusion. So for companies which are already listed on another exchange, if they want to pursue a second listing in Hong Kong, there are two ways to do it. Either a secondary listing, which is what Alibaba has to date, or a dual primary listing, which actually gives them the ticket to be Stock Connect included. So I'm taking this news is a very encouraging piece of news. Because with the conversion to a dual primary listing status, obviously comes with the possibility of Stock Connect inclusion. And I've mentioned it earlier, but I'll repeat it again because it's important. The power of being included in Stock Connect cannot be, it has to be underscored because that is how a company can get exposure and access to the very big retail and institutional investor base in China. And that's very compelling. And that is the unique selling point of HKEX.
Okay, Bonnie, we've run out of time. That was Bonnie Chan, CEO, HKEX, coming to us live from Singapore. Thank you.